Thank you all for coming. Started running a little bit late today. If you notice, there's a few people in the Capitol today. You probably didn't notice, right? Quite crowded. Good to see all the young people in the hall today, the 4-Hers, the young farmers, all the dentists, doctors, all the above. Yesterday, we had the anesthesiologist folks here, the anesthetist folks here. So it's great to see everybody taking part in it. We're going to change things around a little bit today before we get started. I didn't get to introduce in our last meeting when I introduced everybody. I forgot to Sarah Towsett. She's in our office with Miss Emily Doppel here, and my office couldn't function. I couldn't function without Sarah and Miss Emily. I'll just tell you that right now. So I want you to thank them so much. And I don't think I mentioned Sam. Sam, did I mention you last time? Sam White. Sam is our IT. Can I go with that and everything else?
Yeah.
Let me tell you something. This IT stuff is pretty good here. Okay. Anyway, we're just now enjoying it. So it's getting better and better. If you don't mind, Senator Dixon, I'm going to call him up. We're going to change the order a little bit here, and we're going to work off, if I'm correct, Senator Dixon, you correct me, we're going to work off LC 500486S. Is that right? Is that a committee sub or is there a different one? You got it? Should be. Everybody's got it in your folders. Y'all see it in your folders, everybody? Floor is yours, sir. Your mic, I thought it didn't come on right now.
Testing.
Okay.
Thank you, Mr. Chairman and committee members. Today I bring before you Senate Bill 90. It has to do with commercial lending for small businesses is what it pertains to, and it all pertains into disclosures. The purpose of the bill is for small and medium-sized businesses. Sometimes they need a quick infusion of capital for growth or for a situation their business has been put in. And I always like to use the elevator speech of if you owned a pizza business and your pizza oven went out, and those can be upwards of $100,000. Your business cannot function without having that pizza oven. You may not have a line of credit at the bank, or you may not have time to go through that process, and you can go through these other lending avenues, I guess is the best way to put it. But this bill will simply regulate that and discloses to the person getting the loan, the term of the loan and other things of that nature. I'd also like to call up Blake Sims. If you would come up, he did sign up, Mr. Chairman.
I got him. Mr. Sims, state your name. Tell us who you're with, please, sir.
Blake Sims, I'm an attorney with Hudson Cook, and I'm here on behalf of the Revenue-Based Financing Coalition.
Thank you. Glad to have you.
And it also, some of the disclosures that would be required if this bill were to be passed and signed into law, some of the disclosure would be the total amount of funds provided, the total amount of funds dispersed, total amount of payments, total dollar cost of the financing. The payments would be broken out. And then also prepayment, if there were any prepayment penalties or if there were any costs associated with paying the loan off early.
You want to talk, Ms. Blake? You want to go?
If there's any questions, or I can give more details on it. I mean,
It is my understanding that the Community Bank Association, the Bank Association, everybody is all on board with this.
Yes, sir, Mr. Chairman.
I've heard no issue with that. Is there any, have you had any opposition whatsoever that you know of much?
I've not heard from any. No, sir.
Okay.
Not directly.
And, okay. I had this thing down, for, hearing. So if committee members have any questions about this thing, let's see if you all have any questions before we go any further. What number are you?
Thank you, Mr. Chairman. I just want to, small businesses do not have secure loans today. This provides a reason for something that speeds the process.
It does. And I'll let Blake speak to that as well.
sure. I mean, so you're correct. Small businesses can obviously go get loans from a number of areas. They could get them from banks or credit unions, but this is an opportunity. The industry fills a need where if they need capital quickly, and they may not be able to do it through those normal resources, they can get them from these companies. And the companies in the industry now are already doing at least these best practices. And this is just sort of to make sure that everybody does the same thing, right? That follows these and gives these good disclosures.
This enhances disclosure. I think I'm on the same boat.
Yeah.
Senator Emanuel is it enhances the disclosure factor.
Yeah, that's right. To make sure that, folks that are entering these transactions, know what's happening.
Sure.
It's similar to the window, but it's similar to different banks.
No, these are commercial transactions, so they're not consumer transactions. And they're limited by rates and fees already that Georgia law, is limited to. So the terms can vary. Yeah, of course. Yeah. I mean, depending on what the person needs or the company needs, the terms could vary. Does that answer your question?
Loan, record bench loan.
Oh, well, it depends on the product. So this covers both loans and it covers revenue-based financing. So a revenue-based financing transaction doesn't actually even have interest rates.
Right.
It's based on the revenue that the company might generate.
Right.
So technically, if the company doesn't generate any revenue, they don't owe anything. So yeah, there's certainly a cost of the financing, no question. It depends. It depends, but it's limited to what Georgia law allows.
Any more questions, sir? Okay. Anybody got any questions here? Senator Hodges, thank you for joining us. I know you had another committee here. We appreciate you being here. As a banker, you understand what we're talking about on Senate Bill 90, right? So you're with us on that. Anybody else in the audience wish to talk about this bill, or anybody want to say yes or no, or anything about the bill? Okay, guys, I had this down as a hearing, but if you all don't have any problem with it, I don't see any reason why we can't go ahead and just change this to a vote and just move it on to the committee and see how it works and rules if anybody's got any problem with it. And I don't have any problem with doing that. If that's okay with you, Senator Dixon.
Yes, sir, Mr. Chairman, it is.
So if you will that, and everybody's okay with it, we can move it to a vote instead of a hearing, and we can move forward with it. I mean, there's no sense coming back next week and telling the same story twice. So that's okay with you all. Is it okay with the board? What's your pleasure? Have a motion to pass? Second, have a second, Senator Halpern. Motion. All those in favor, please raise your hand and say aye. Motion carried unanimously.
Thank you, Mr.
We'll
Chairman.
move to the rules.
Thank you very much.
Thank you.
Thank you.
Thank you. Let's see what's next now. Yeah, Huff's not here yet. We got enough here. Okay, guys, we're going to change your order around again a little bit more on you. Let me get my resolution out here. Where's that thing at? Sir? Let's see where to put the resolution at. We're going to take up Senate Resolution 82. This is a Senate resolution that I was asked to carry. And if you don't mind, I'll just sit right here and do this. This requires as a constitutional amendment. That means 2/3 of the chamber has to vote on this if it gets to the floor on both sides. And basically what this does is it gives ACCG the authorization to waive taxes down to a certain amount of whatever the property sells for. Now, I'm going to ask ACCG Dante Handel. Dante, will you come up to the table here, please? Dante has been my resident helper. He has put a lot of time and effort into this. He's visited with everybody on both sides of the chamber. And here's what the issue is right now, folks. There are some properties that are out there that owe great amount of taxes that are owed to the county, the school board, et cetera, et cetera. And what's happened is they owe so much taxes, no one will buy them at sale because they're just inundated. In fact, an example, Senator Robertson brought me from Columbus, Georgia. They have one that has $600,000 owed on it. And it's a shack. Literally nobody lives in it, but it's got so much taxes on it, no one to buy it. So what this law will do, it will give the county commission on a per property basis. In other words, it has to be taken up each time, the ability to waive the taxes down to whatever the amount the property sells for. I'm assuming always on the courthouse steps. Is that correct, Dante?
Yes, sir.
You want to speak to that? Go ahead.
Sure.
This is Dante Handel, everybody, ACCG.
So I appreciate it. It's a constitutional amendment allowing the county commission to authorize the tax commissioner to waive delinquent taxes down to the sales price at a tax sale would allow the city governing authority to do the same thing for city and an independent city school district taxes if they have them. The county would waive for the county portion of the taxes and the school portion of the taxes. This would be by resolution. So county governing authority and the city governing authority would be able to pass a resolution that would say they can waive 100% all the way down to the sales price, or they'd be able to pick a number in between. And the only caveat there would be that the tax commissioner's costs need to be recovered.
Yes, cost. Give us an example, like you sold a piece of property for $5,000, then we figured out like maybe it cost 4,000 and about $1,000 in tax. Is that about right?
So,
cost?
Let's say you had a property where the amount of taxes owed was 5,000, a buyer would pay 4,000, so it could waive 1,000 of the taxes. And then out of that 4,000 that's paid, the tax commissioner's costs get recovered, and then the rest gets split between the local governments.
And the beauty of this thing is also is it puts these properties that can't be sold back on the market when someone buys them, and then it creates, put them back in the tax rolls again. And then school boards and everybody starts getting their taxes again. So I can't imagine it not being, a good thing for what we want to do. We have, I think, anybody from school board? They were in my office. Justin? Justin for the School Board Association. Justin, you want to come up front, boss? Why don't you take number 2 there if you don't mind? State your name, tell us who you're with.
Justin Pauly with the Georgia School Boards Association.
Glad to have you.
Thank you very much. Just wanted to say, Chairman, committee members, we appreciate what this bill is trying to do. We think it's a good thing to get these properties back in the books. I don't think anyone would argue that. The only concern that school boards would have with this is that it allows cities and counties the waiving authority, but doesn't allow the school boards any waiving authority, even though the school boards are a taxing authority. And so we just would like to see that be added into the bill. But outside of that, there's no opposition to it.
Right. Well, the only question that you and I had about that was, and I don't know, and I might ask my vice chairman here, I didn't know a school board had the authority to waive taxes. I didn't think that was, I know the county could, but I didn't know the school board could. So that was sort of a question that came up. We have counsel, so I don't know.
And
So-
just our understanding, after you and I talked, sir,
Right.
we weren't aware of anywhere that says that school boards cannot waive taxes. We
Okay.
weren't aware of that.
I don't know. So I don't know.
So it'd just be.
If there's something we
question
need to
to
come back and
confirm.
address it, I mean, you'd have this board, we'll definitely address it. That's an issue there. We just want to get it back on the market and get
Yes,
the
sir.
properties that are derelict out there
Yes,
where
sir.
someone can buy them at a reasonable value and put them back in the tax rolls.
Yes,
That's
sir.
all this bill does.
Completely
That's-
agree.
Dante?
So I'd say, under current law, the county is able to waive penalties and interest for the county and the school portion of the taxes. This resolution would be allowing them to waive the delinquent taxes in addition to the penalties and interest. If we were to split it out and allow the schools to make that decision independent of the county, we'd have a situation where the county is able to waive taxes, penalty, and interest for the county portion of the taxes. The county would waive penalties and interest for the school. And then the school boards would have to come at a separate meeting and then vote to waive their portion of the taxes. So that.
So you're saying it could cause a debacle, a little bit of bog down.
Yes,
Yeah,
sir.
I understand. And what we're trying to do is not trying to override school boards, obviously. We're not, but we're just trying to get it back on the market as you and I spoke about it.
Yes, sir.
And I appreciate you saying there's no opposition. And Dante, you might want to, if you will, you might want to make sure that we reiterate that it's a per parcel deal. The taxing authority, ladies or gentlemen, whoever running the taxes in your counties can't make this decision. They have to go to county commission on a per property basis. So it couldn't be any, we couldn't have any wrong things going on, that type of thing. Couldn't have any bad things going on.
So if we were to look on line 29 of the bill, that says the governing authority would have to vote for a specific parcel or parcels. So line 29 is in the county section of the language. And then if we were to check on the city section of the language, I think we'd see that same language as well.
That 43 down there. I think it was.
Would be lines 45 and 46.
Yeah. 45. And once again, even though we pass this out of committee, if we do, and we move it to rules and it goes to the floor, no matter what happens, the people of Georgia will have to vote on this constitutional amendment. And it's not, we don't make that decision, the voters of Georgia will make that decision, and hopefully they'll make the right one. What number you might?
Mr. Chairman, one quick question. This refers to the tax commissioner, which is a constitutional officer, and the governing authority. The bill, those are two separate. You're talking about the county commission and the tax commission.
Right.
So who makes the decision?
If my understanding, Dante, that the county commission would make the decision once that person brings them that particular parcel of property to waive that.
Yes, sir. So
So-
the county commission passes a resolution delegating the authority to the tax commissioner to waive the
That's
unupfront
right.
taxes.
That's right. That's right. But she has to get that authority on a per parcel basis.
Correct.
Okay.
Per parcel basis. That's right. We have someone on Zoom, I think, don't we? You want to say something, Chairman? Go ahead.
Thank you, Mr. Chairman. Just a follow-up question. So the county can waive the taxes, the delinquent amount for the county and the city, both, is that right?
For the county and the school portions of the taxes.
Okay, city's not involved, just
So
county
the
and school
city
board.
can vote separately to waive the city and independent city school district, if applicable, taxes.
And then once, assuming the sale goes forward, and then the administrative expenses of the sale are taken care of and you have a net amount, is that then pro rata returned back to the taxing authorities depending upon the proportional ratios each had a tax obligation to them?
Yes, sir. So it would depend which one weighs. The county and the city would be able to arrive at the decision to waive independent of one another. But in practice, I think both would be incentivized to do so they can recover some amount of the taxes, but whatever is paid should go to each pro rata.
Okay, thank you. Thank you,
Yep.
Mr. Chairman.
Did you have one? Okay. Okay, we got a Zoom call from Miss Tabitha Dupriest. She is a tax commissioner. Miss Tabitha, can you hear us? Sam, I did that right? Hey, there you are. Can you hear us? Not yet? We can't hear you yet.
Right. Can you hear me now?
Yes, ma'am. How are you? Thank you, Miss Tabitha. Thank you for joining us.
You're welcome. Thank you for having me. I was just going to add a little bit to it. We have the GATO and some of the legislative committee here has been working with Dante and everything on this particular bill. One thing we want to stress is most of these properties are going to be those dilapidated properties, like you stated, ones that are basically health hazard, that criminal activity, they bring property values down. And due to the fact that no one's ever appealed the values of the properties, like the shack you were talking about, it's overstated in the fair market value. So these taxes are higher than the property in those cases are even worth. And we've got a lot of these properties on our digest that we can take to sell 2, 3, 4, and 5 times, and they just sit on the digest and they don't ever sell. Now, the counties can go in and do what we call a nuisance abatement, or we as tax commissioners can bid it into the counties. The problem with that is it becomes a county liability, and then it takes taxpayer dollars to try to clean these properties up. With this bill, if it were to pass, it gives us, upon the authority of the county governing authority, to accept less than owed on these property taxes. Someone bids it in for less than owed, the fees are paid. And as one of the questions was, is if we collect a certain amount, it will be split between the county and the school and all the other taxing entities for whatever we have out there. But then that purchaser is going to then take that property, clean it up, and put it back on the tax digest at a higher value, bringing in more revenue to the counties.
Yes. That's very well explained, Ms. Tabitha. Thank you for that. And she is Worth County. You state your name and what you did, Ms. Tabitha?
I'm Tabitha Dupriest. I am the Worth County Tax Commissioner.
Worth County Tax Commissioner. And I think Dante you had talked with her before, that's why she offered to come in and talk to us about it. And most of the tax commissioners that I've heard from, all of them are 100% behind this because they know it's got to deal with it. Okay, number 13.
But I'd say all these properties are already being advertised and taken to a public sale, so everyone has an opportunity to come in and make their best bid and try and win the properties before they could.
Sure. Go ahead.
Many of these properties are going to be limited. Example,
I would defer to Commissioner DePriest. I think she'd be better able to answer that than I would.
I'm
Can you
sorry.
hear, Ms. Tapp?
Yeah, I didn't hear the question.
Emmanuel, hold it a little closer to you.
And the
Thank
question was that older apartment buildings abandoned in condo the same way as individual parts of.
He's asking if a multi-family property system can be counted the same thing as a single family residence or something you may have on the books. I would assume so, but I don't know.
So you're meaning if it's like an estate or multiple people own it?
No, he's talking about like that apartment complex. I'm assuming that it had just been abandoned, I'm assuming, or
Oh.
hadn't paid tax on it.
Right. Now it depends if it's an individual owner to one of the apartments or if it's a whole complex that one individual owns. It would only pertain to that particular apartment if it's individually owned and not paid, or the entire complex if it's a one owner owns everything.
I think I understand that. Well, if I may, Senator, in our area, you mentioned it's probably about investors coming in and buying the property. That we would welcome it because they'll clean it up and they'll put it back on the tax records if somebody doesn't buy it. But on Tuesday morning, I mean, the county's going to go out there or the tax commissioner's going to go out there and say, this is the number and they're going to offer it for sale and it'll be done right there. I'm assuming as long as it doesn't have any encumbrances on the title, et cetera, et cetera. I mean, it'll be a sale that they'll furnish. And it'll be done and they'll put it back in someone else's hands, then it'll change over. But now understand this, if you buy a piece of property from somebody like a tax sale, the original owner has, correct me if I'm wrong, Dante, a year and a day, basically, is that right, Ms. Taft, a year and a day to come back and claim that property? And they have to pay, I think, is it 20%?
Yes, sir.
20% to you if you bought that piece of property, but they can redeem their property if they wish to. So it doesn't matter if an investor buys it up or not. John Doe can come back and get their property if they want it. They just have to pay the advertising, the fees, the sale, and the 20%, correct?
Correct.
Basically, and they get their property back. Question?
So essentially, this legislation, owners of an apartment building could get their back taxes waived using that scenario, is that correct?
Back taxes raised,
Waived.
waived?
In other words, they would let the property go into foreclosure, someone else would buy it, taxes would be waived, and then they would come back and buy it.
If I had to guess about that, I would say he'd be the biggest fool in the world because I would, or anybody else would buy it out from under him and have his apartment complex for little or nothing. I don't think that would be an issue, but it could happen. I see your point, but I can't imagine an individual letting that happen. If he's trying to get out of taxes, that's not the way to cheat him.
Does it make sense to protect those kind of properties from giving those kind of organizations or entities or corporations the ability to do that in this legislation? Yes.
I think we talked about that. Was that, what did legal counsel quote or something, tell us about excluding the original owner for buying their property? Because the original owner can still go back and buy their taxes back. I mean, they get FIFA'd, et cetera, and the years can go by, they can still they can go pay off the FIFA. I'm sure Ms. DePriest has people that pay off taxes 2 or 3 years old. But they have the ability, but they have to pay a penalty and interest. So I don't know how you'd actually exclude the previous owner from buying back their property. I'm not sure how you do that, sir.
So only because those taxes under this bill would be waived. And then they would still have a year after someone acquired to come back and buy it back. I'm assuming they would buy it back at the lesser price with those property taxes waived. So that may create an opportunity for a large group to take advantage of this legislation if they're not excluded from the purchase.
Now, I don't think any of that law changed. Nothing about, go ahead.
Right. So we're not changing any of that. That's an existing law. I guess it would be possible for them to do that, although it would be incredibly risky. And if they had the money to do that, I would think that would be better off just paying the taxes originally.
I can't imagine them risking it like that because we're not changing that part of the law about how people can redeem their properties or whatever. That's not changing whatsoever. I don't mean to get off track, but that's 100% right, correct?
Correct.
Hold on, I got too many going at me. Who's 9? Go.
Thank you, Mr. Chairman. First question, does is there a potential for, say there was a lien that was against the property? Does this clear title and do everything? It's just, if you've got someone that has a lien interest or a couple people that have lien interests, maybe whether it's cleanup, whether it's maintenance, whether it's, construction lien on some work that's been done. Does that person get do they have a place at the table to recover before the write down goes down to the sale value and it's disposed of, or is that taken care of in this?
So as written, this resolution doesn't make any changes to that existing part of the law. And then I would defer to Commissioner DePriest on that one as well. I think she'd know better the specifics of how that works.
So your sense is that
Go ahead, Mr. Evans.
Oh, I didn't know. Yeah, I'm sorry. Yes, that's what happens. Before we ever even take a property to tax sale, we have to do what's called due process. We have to notify any and all interested parties on the property. That would be the landowner, the finance companies, mortgages, prior deeds, family members, if there's any type of FIFA or mechanics lien, anything that's against that person and that property, we have to notify prior to the tax sale. So they can actually come in and pay the taxes so they don't lose their interest and then go after the person in that mannerism. Or if it goes to tax sale, then they do have the right, because they have an interest in the property, to redeem that property back.
And you're asking, if I understand correctly, like if a bank had a mortgage or something out there they found on a property, had an encumbrance on that property, or they get it cleared. I mean, it's up to them when she notifies them to go clear their stuff out or either be there to bid on that piece of property. Is that right, Ms. Tabitha?
Yeah, they can actually pay for it before it goes to sale. They can pay the taxes and just
That's
add it to the mortgage company and then add it to the lien.
one last, Mr.
All right.
Chair. With respect to the school board, is there ever a circumstance in which the school board may not agree that the school board ought to, by resolution, say, hey, we're good to have this happen? Because the county commission is in many counties, the school board obviously is going to be the largest. They're going to be owed the largest amount of tax. And it makes sense that the commissions in the process of thinking about what the future land use is, and they make those kinds of decisions. Should the school board have a bite at the apple to pass a resolution to agree to this, or do you anticipate there being any conflict there?
So as written, this would allow the county to waive the delinquent taxes on behalf of the schools. The county's already doing that for the penalties and interest. So if we keep it as is, that allows the county to make the decision for the county and the school, taxes, penalty, and interest. If we were to split it out, then the county is waiving taxes, penalty, and interest. So everything for the county would be waiving the penalties and interest for the school. And then we'd have to have a separate meeting where the school comes and we're to waive just the school taxes. So I think that adds a good bit of complexity to the process. One other thing I'd like to add, so Freeport exemptions currently, those can be implemented by the county governing authority without input from the schools, but those would affect the county and the school portion of the taxes.
And I assume schools are fine with that. The school boards have no issue with that approach at this point.
I think the concern about is partly the precedent it sets, bypassing the school boards. And I think that's where the major concern is. It should be a partnership. And I can't, like you, I can't imagine many scenarios at all where a school board would say no.
I just asked the question because this is a train leaving the station. This document's the place to make that tweak. I'm not trying to complicate things. I just.
Right. Senator Kennedy?
Thank you, Mr. Chairman. So one follow-up question. So after 2 failed sales, then the county elects to have the 3rd sale and decides to accept whatever the amount of the bid is and allow the property to then go back on the market. Is the additional indebtedness for the tax obligation extinguished, or is it just decoupled from the property?
I believe it would be extinguished.
Yes, sir.
Thank you.
Stood from ledge cancel will be extinguished, be gone. You guys got questions? Now's the time. What's your one, what, 6?
Question or an observation, Senator Jones' question earlier. I guess if the governing authority of a county decided after 2 tax sales to accept a lower bid, it would be up to them if the former owner tried to come in and buy the property back for a song. It would be up to the governing authority. They could say no. They could accept a bid from somebody else. I mean, are they under an obligation to accept the lowest bid? Or if I blew out $400,000 in real estate taxes and came back and bought my property, could the county commission say, no, we won't sell it to you, Mike Hodges, but we will sell it to the next person?
So, and I guess I'd ask Commissioner DePriest to correct me if I'm wrong on this one, but as it's written, the county governing authority and the city governing authority would be able to decide how much of the taxes they want to waive up to 100%. So if they wanted to say, we're only willing to waive 10%, 20%, 40% of the tax, they have that option. If they thought that there is a window of opportunity where that organization is only going to buy it back if all or mostly all the taxes are waived, they certainly have the option of waiving less than that. I don't. So they have the option of waiving less than that. I think the tax commission would be obligated to accept the highest bid on that property.
Mr. DePriest, is that your understanding? Is that how it works?
Yes, like what we would do, so we would accept the highest bid. So, and we can even say, if you have a piece of property and you started off at, let's say, $5,000 and it's a no sale. So for 2 tax sales, that same property, it's just continuing to increase with interest and penalties on our digest. So the 3rd tax sale, we sell it and we take it to sell. It sells for, let's say, $500 instead of $5,000. If that person comes back within a year and a day, that owner, he has, per current statute, has the right to purchase that property back regardless. It's not the county governing authority or the city to say they cannot purchase it back and redeem it.
But once again, the county doesn't have, your point, Senator Jones, the county doesn't have to go all the way down. They have the right to adjust wherever they need to be. So if an owner was trying to do that, I think they could see right through it. I would think they would be able to, but to buy it back. If that answers your question.
Do we by law exclude the original owner from having that right? Would that be a possibility?
You're kind of over my pay grade on that one. I don't know actually the answer to that.
Yep, I'm not certain the answer. I would defer to legislative counsel on that one.
Yeah,
This is a constitution.
right. I don't think you can stop somebody from bidding back their property. I think they can have that. That's a Georgia, that's a constitutional right. They can buy it back. So I don't know how we'd be able to change that part of it.
Well, this bill amends the Constitution, because it's the Constitution amendment. So if you want.
Only on the section to allow them to waive down the taxes. That's all it amends. It doesn't amend any other part of the world out there.
Yeah, my question is, could that be added as a precaution to stop the original owner from doing it?
And what would be your actual ad that you want to put on that?
To preclude the original owner from being able to buy back those properties after the taxes and other fees have been waived.
To preclude the original owner from buying back the property after the second sale or whatever it is?
Yeah, after the county has agreed to waive the taxes and fees.
I don't know how to, I can't answer that question for you, Ms. Tabitha. That'd be a,
Well, I think
that's a
that,
legal scholar question. I don't have the answer to it. Ma'am?
I think that would be hard too, because again, you have you're talking about any interested party as well. So it's not just the landowner. One thing that me and Dante discussed was if it sold for less than owed and the original owner did try to redeem it back, then you could write something in the law that stated they'd have, all those taxes would come back at that point. So where they would have to be responsible for it since they were the original owner. But the problem and the issue here is most of these properties, you're not talking about properties that are worth anything. If you had a nice house or even a decent house, these people are taking a chance at it selling on the courthouse steps for $10,000, $20,000, not just for the taxes to begin with. So these are just properties that nobody has wanted and they're sitting in the county dilapidated and just causing issues. I've never seen a property that we've sold at a tax sale in 22 years that if it was a decent property or even just vacant, nice piece of land, it didn't sell for what was owed or more than what was owed. So it is a
That
risk.
was our finding.
taken.
Yeah, that was our findings too, that it's just this infinitesimal amount of property because somebody would have already bought it up or it would go much higher than they would lose their property. They're not careful on that. I don't want to complicate it, but I understand what you're saying. I just don't want to complicate it. I mean, Ms. Tabitha, you've read this bill, you understand this bill, and you've talked with other tax commissioners. I mean, are there any reservations on this bill?
No, sir, there's not. I've even spoke to my county attorney about it. And we discussed even the per parcel, going up and having the resolution passed. I think the one thing we need to consider is if, as tax commissioners, if we're going to have to send them a list of the parcels that were taken to sale that we know are not going to sell, because we've done it, time and time again, having to take it to them and wait for them to write the approve it and then write the resolution. Then now if we have to go to the school board, now we got to go to their meeting and make sure they've got this information. So you're prolonging it. So this is something that's going to have to start out months prior to our tax sale. And if they don't decide to do it, it's okay. Now we have to do different districting. So I think it's going to convolute the whole situation if we have to go to every single entity and get authority to waive these taxes. I think the governing authority, when we take them the list and they pick and choose and show which ones, then it's actually going to be a benefit to the county and the school board in the long run, because it's bringing that revenue back in within that next year.
Thank you. Thank you, Ms. Tabitha. One more question.
One more question, Mr. Chairman. A scenario where I own a piece of property and my tax bill is $2,000. And it goes to sell twice and nobody buys it. And on the third sale, the county decides to accept $500. So they accept $500. Somebody owns that property for $500. If then I want to redeem my property, what do I have to pay? Do I have to pay the $2,000 that I owed plus the percentage, 10% or whatever it is? Do I have to pay the $500 that was purchased? Plus the not 10,
Plus 20%.
So
We're not changing any of that law. That law is not changing a bit how you redeem your property. I mean, you have to follow whatever that's set up. You got a year and a day to buy it back at 20% plus the fees. The tax
20%
part,
of what?
pardon me?
20 of 500 or of 2,000? That's of the sale of the lower of the diminished sale. So I could end up walking away from $1,500 or so in property taxes.
I don't think so.
I don't know.
You could walk away from it, but wouldn't you attend the risk of somebody buying his
Just
property?
I'm
I mean,
asking the question. I know the intent here, the intent
Right.
is to move property that's not moving, get it back on the tax rolls.
Right.
My only concern is that large scale real estate investors could use this as an opportunity in bad times to unload property and then buy it back and forego a lot of taxes that they might have had to pay. Now, if the counties don't care, I mean, I don't know that I would, but I just bring that up.
okay, Dante?
Yep, so at a minimum, the property has to sell. So let me back up. Let's assume that the counties were willing to waive 100% of the county and school taxes. The cities passed a resolution to waive 100% of the city and independent city school district, if applicable, taxes. That property still needs to sell for enough to cover the tax commissioner's costs. And I think depends on the property, and Commissioner DePriest, if you can correct me if I'm wrong, but I think it's probably a few $100s each time they need to advertise the property for a tax sale and have someone go post on the property. So I think a minimum is probably around $1,000, give or take.
So then how do you set the price at which I redeem that property that I only want?
It would still be based upon the sales price, but
Sales price, the lower sale.
Yeah, lower sales price. Dante, anything else you got for us that you want to give the committee or tell them about? Anything else in general? I mean, I just want to reiterate, we're not changing any law except the fact, given the county, this is happening in some areas already. And what the county tax commissioners did is they went to their local attorneys, and the attorneys gave them a letter saying you could do this and tried to help them out. Technically speaking, we don't know if it's legal or not. We're just trying to make it legal where these tax commissioner and people can put this stuff back on the market to get it back on the tax records, I guess you might say.
So that
Yes, sir.
there's one more thing I'd like to add. So if I'm thinking about it, the county portion of the taxes probably around 20 or 30%, but the school portion of the tax is usually about 2/3 in most areas.
Right.
So if we were to split it out, and I'd encourage us not to, if the county waive the county portion, the city waive the city portion, and the schools were to do it independently of those two, there's a strong chance that could hang up some of these properties, given that it's 2/3 of the overall tax amount.
This time is now. Go ahead, sir.
I am supportive of the intent. Conversation where it's been around trying to use a fraud in the system, particularly in large urban areas where there's light and those properties are private property. Concern is making sure that those properties are funding to the state taxes by trying to be costing and the scheme. We all know that there's multiple things that corporations always create when they're only another to buy it, get around this. So that's such a concern. Generally, I am very supportive.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman. So in fashioning this policy, and I agree, I'm sympathetic as well. I've got counties in my district that have this problem. And as we talk through this issue and the potential problem, and what we don't want is the owner of the property to game the system.
Right.
Was it ever considered that perhaps, with the example that Senator Hodges gave, that if in fact you own the property, it sells for less than the taxes owed, that perhaps that owner not have the right to redeem the property? And if that were written into this, then it precludes the ill-gotten potential gain, and it stops the potential gaming of the system for that one seller. Can y'all close that door, please?
Yeah, please close the door.
Thank you.
Thank you.
Was that considered as an option, or what do you think about that as a potential way to address the issue that we're talking about?
Yes, sir. So we've considered that, and I guess what I'd say is for the person who owns the property to choose not to pay the taxes, let it go through this process here where it eventually sells at tax sale. If we were to change it so that they can't buy it back, we are removing some due process rights regarding the right of redemption. And I think that would be a good deal of risk that they'd be undertaken for that to happen. But also, if you have a property owner who hasn't been paying the taxes on the property, even if they were to come back and exercise the right of redemption to buy it back at that lower rate, they still weren't paying the taxes and likely will continue not to pay those taxes. And I think the property will just end up back in this condition sooner rather than later.
But doesn't that argue on why, and perhaps the person doing that ought to lose their rights of redemption that other taxpayers have?
Yeah.
I defer to the committee on that one, but I understand your point.
I tell you what, let's do, guys. And I hear you. And I think we're there. We just hadn't quite got there yet. Why don't we just turn this into a hearing, if you don't mind? And let's make this a hearing today and bring it back next week, and let Dante and I and possibly anybody, Senator Hodges, Senator Kennedy, get legislative counsel in on this and make sure that we can do the wordings like you guys are talking about. I have no issue with what you're doing. I think you're right. You know, to stop the guy from using, what number are you? Got it?
So the only concern I have, and I think we're taking the right approach. Thank you, Mr. Chairman. The one thing I want to caution though, is that yes, there are times when it'll be corporations or other people who are trying to game the system. And we do need to make sure that we're not building in something that actually incentivizes
Right.
fraud and incentivizes
absolutely.
that action. But there will be times when it is just a regular person who
Absolutely.
owns a piece of property, who falls on hard times, doesn't pay their taxes, and is unable to pay them. And I don't know the timeline for when the tax commissioner and the county decides to put it on the block, and then put it on the block and put it on the block. My assumption is that they could do that in, let's just say, a year and 3 months' time, and it get to the point where the third time is ready for a sale. If we eliminate the ability for that person, again, assuming now that it's just a regular person who's fallen on hard times, then we're accidentally catching more people into the trap that we're trying to set for the corporate side. I actually think Senator Hodges made a great point in terms of saying then that the person would have to pay what they had originally owed and then be able to still redeem. I mean, I think if we're messing around with, can a person actually get their property back? This is already a constitutional.
Well, here it goes. And you're dead on what you're saying. After the second time, if we get the wording what we're talking about doing, that original owner would not be allowed to buy that piece of property back.
Right, but
And that
maybe
Give a
maybe
little
we're
bit,
not trying to
Right.
actually catch that fish, you know what I'm saying? We're trying to catch the person who is the businesses, the corporate investors, the ones who actually are trying to game the system. But maybe the approach to take is that in order for the person to buy it back, they'd have to buy it back, having made good on what they owed originally, and then some. I don't know, but
well, let's turn this into a hearing.
Yeah.
Let's reevaluate what we got here. And you and I will get together with legislative council, if you don't mind, and we'll try to seek out exactly what you guys are talking about and bring it back to you. Is that okay? I knew we had a good committee members up here. Smart, good people here. Dante, thank you. We're gonna put that on the hearing. We'll get it back with you on this again. Thank you. And school board, if you want to get with Dante on that, if any kind of language, we'll look at that. How about that?
Yes, sir.
Fair
Thank you.
enough?
Thank you very much.
Thank you, guys. Thank
Thank
you.
you.
Thank you both. Thank you, guys. On that, where we at? It should be 84. Is that okay? Very good. Come on up, Senator Setter, Senate Bill 84. I've got a couple of committee members that they're, you know how we're all doing committees at the same time today? They need to go. Do you know what time frame this will take you to go through this? I know. Now you regret it. Well, we're going to deal with, Senate Bill, what is it? LC 500463.
Right. And this issue is about elderly financial exploitation. If you look at that, that could be anybody over 65. It could also be someone under that age that has dementia, Alzheimer's, some sort of mental incapacity. But the U.S. Department of Justice says that in a year, over 10% of the elderly will be exploited. And this is a tool that's been done in 33 other states. We're using model language that lets the financial institutions put a pause on it and say, we've got to look at this and see before we disperse this money. In the other states, I say generally just in about every case, when they say there might be a problem here, there is. And instead of money being gone after the fact, and those in the financial security business said we didn't have any tool to delay this, this would give them a delay of 15 days. They would have to notify the commissioner, and this is the Commissioner of Financial Exploitation. I looked in the code. I didn't think I'd ever met that guy before, but it defines him as the Secretary of State. So that is our Commissioner of Financial Exploitation. And they would have to notify him within 2 days could delay it up to 15 days, and under certain circumstances, it could be delayed another 10 days. But this has been very effective in other states in keeping money from being dispersed and people being taken advantage of instead of the money being gone and trying to go back after the fact and do it. So that's the essence of what the bill does. I know Zuma Saharis is here with the Secretary of State's office. She's been doing this since 2014 over there for the Secretary of State, trying to take care of these people.
Do you want her to come up?
Well, we can, but I know you're short on time, and do it at the pleasure of the chairman or the committee too, I guess.
I mean, if the committee needs to hear more about it, that's.
Okay.
We,
You want to come on up here and
please state your name. Tell us who you are, please, ma'am.
I think.
My name is Nuala Harris. I'm the Director of the Securities, Charities and Cemeteries Division for the Georgia Secretary of State's Office.
Welcome.
Thank you. I want to, Chairman Summers and members of the committee, thank you for having us here today. Our agency wants to thank Senator Hufstetler for his leadership in finding additional solutions to address one of the fastest growing forms of elder abuse, which the Senator told you, is financial exploitation. More than 3.5 million older adults are victims of financial abuse each year. That is 1 in 5 seniors. A popular area where they target is in their retirement accounts and their investment accounts. As Georgia's aging population increases, financial abuse against this group follows that growth. So the goal of this legislation is to prevent the financial exploitation of elderly and vulnerable Georgians by coordinating the collaboration between the financial investment businesses, government agencies, and law enforcement agencies. So this legislation basically is creating a stronger network of partners and gives us additional tools to address the suspected financial abuse. So the hallmarks of this legislation are its report and hold provisions, meaning reporting to the securities regulator and the other adult protective agencies so that we can coordinate our efforts to help the citizen and the financial institution, and to put a temporary pause on that suspicious transaction to determine if there indeed is exploitation happening and with that senior. So we thank you for considering this legislation. I'm here to answer any questions that you may have. Thank you.
Committee members? Any questions? Wow. Did you say you were in a hurry, Senator?
I don't want to say a word at this point.
One question here before we.
Just clarify who this applies to.
This applies to the broker-dealer firms, the people that work for those firms, the investment advisor firms, the investment management firms, and the people who work for those, basically the people who are managing your retirement accounts, your asset, those types of investment accounts.
This is not a banking.
This is not for banking, but I will
savings
tell
and
you,
loan bill. I mean, it's
not
a
savings-
Credit union.
no, it is not.
Question?
Thank you, Mr. Chair. What's the remedy? If someone doesn't do this, what happens to them? Are they subject to a licensure action or what? If they don't, I mean, this is a line 43
Yes.
says shall promptly.
Shall means if they, under the Securities Act, if they violate, if a firm violates any provision of the Securities Act, yes, we can take enforcement action against them, which could be, you're absolutely right, pulling their license, barring them from doing business in Georgia until they follow the act. There are many things that we can do.
So that's what's contemplated. There's no other remedy contemplated in this. Is there civil liability that?
For well, we're an administrative agency, so we can take administrative action, which would be, consent orders, orders to bar, orders to, cease and desist. But we would then go to the Attorney General's office to, go after the firm civilly or even criminally if we thought there was some criminal.
But if I could add, we're trying to give them a tool that they would like to have.
Mhm.
They say we can't do anything until after the fact. So we're giving them a tool to help them stop this before it happens.
And I will add to that, once the money is gone, we do this every day. Once that money leaves the account, there's no getting it back from that scammer. It's very difficult and it's devastating to a senior who, sometimes has limited funds.
I wish you could do a lot more to them. I hate to say it, but that's is what it is.
One last question, Mr. Chair. Do the tools exist if a financial, advisor sees this and makes the report? Is there an ability for the system to come in and stop transactions from happening and then kind of interdict this scammer, or are there limited tools to make that happen?
So yes, if the firm decides to report this, and the firms are already reporting this to us, but this gives them the ability to put a particular pause on that transaction. So this allows for, it gives the firm 15 business days to start to determine what's really happening here. What happens is within that time period, and it's addressed in section 103, that they have 2 days to notify the account holder to make sure, is this really what you want to do? Because in our, things that we see, many times they're coerced or influenced, that then they have 2 days to report it to us, to let us know that they're investigating this or looking into this. During that time, we will probably reach out to the account holder, to the senior as well, to find out that what's going on here. They have 7 days to prepare a report of their initial findings and turn that around to our agency. And at that point, we will determine together whether, to open up a full investigation. While during that time period, the funds are paused so that the money doesn't leave the account.
Okay, guys, we got to move this along. Got another committee meeting behind us. We have a motion pass by Senator Jones, second by Senator, I think Anderson, second that motion. What's the favor of the thing? Yeah, all in favor? Any opposed? None. Motion carried.
Thank you very much,
Thank
Mr.
you.
Chairman.
Thank you all for
Thank you
coming.
very much.
Guys, thank you all for coming. We adjourn the Banks and Banking meeting. Thank you.